Alright, good morning, people. It is Friday, December 15th, and we had high impact news at 8:30 in the morning, and nothing since. So, if we just take a look at this weekly candle, in terms of range, definitely expanded quite a good amount. So it's reasonable to expect less movement at this current day of week and this current time of day. That's how I internalize it. Okay. We had high impact news at 8:30, 9:15, and 9:45, but that's already to pass. So we know there was some squeeze of volatility, some injection of volatility that will perhaps be taken care of, meaning they'll be swiped by the end of the day, and that's what I'm looking at. My interests are at this buy side liquidity, just because we've been running up the entire week. If you just take that weekly range and do it on the weekly candle here, and you look at the 20 to 30%, then go back on the hourly, there it is. So we've already retraced back into the 20%. For the 30% retracement, do I think it can happen? Yeah. Am I favoring it? Not so much, just because I'd like to see that daily inefficiency right below the marketplace be treated as some sort of breakaway before we trade into this buy side pool. Now, one concern I do have is just time of day. So, as a low-hanging fruit objective, I'm just looking for this buy side pool. After that's hit, I will make my decision upon whether this previous day high is to be breached or not. But first, I'm just looking at this, and the reason for that is if you look at these new day opening gaps, how we've been progressing. First, you look at this new week opening gap, we use it as support. Then this new day opening gap, support. There's a new day opening gap between 4 to 6 here. There's no change between these two candles, but that price of 4,750, 4,700 and a quarter, and 2/4, that was also used as support. On Wednesday, look at the reaction. Then Thursday, also used as support. And so Friday, I do think this can be used as support in terms of taking this up into buy side. If you notice, it's also below the midnight opening price, but we are far extended from the weekly open. So, and going down to a 15-minute, like I said, watch this new day opening gap and watch this buy side. So in my head, it's almost just like this little range right here that we're in right now. I'm not saying that it's not gonna move outside down here, but right now I'm favoring this, and if I'm favoring that, I can use my implied dealing range to see where these forecasted ranges would be, or where the algorithm is using certain price points, if that makes sense. So that's just my little range right now. 25%, 50%, 75%. Terminus, quote unquote, inception. This is basically an inception. Now if you take a look at NASDAQ is actually creating highs right now, or it just did create a high. And you look at this, right, we're nowhere near that high or that high. So just something to keep in mind, kind of weighing out both markets. That's something that's important. One thing I did forget to mention, and this is gonna be a point for going into next week, but if you look at these two new day opening gaps, just the placement of them, and in alignment with this down close candle and this down close candle, it's a quite large range, and to me it seems like an order block, but it's a higher time frame order block. So because it's a higher time frame order block, the possibility of this Friday for me, just like time distorting, just kind of moving here and there, back and forth, but not really going to daily or weekly objectives. Keep in mind, we've already traded to daily and weekly objectives, some monthly objectives too, so that's very important. You don't want to place too much emphasis, right? Aiming for a buy side pool like this on Friday is asking for too much, in my opinion. And I would even say aiming for this buy side pool is asking for a good amount. You can just work within the hourly ranges and still be right, and you'd actually have more probabilities of being right because you're asking for less. So like I was saying, I do think that this order block is of importance. So what you would do is you would take this price opening, then you would take the mean threshold, I don't know the exact number, just by the eye of it, 47.64 looks like mean threshold. Now I have to know. 47.60 mean threshold and the low, so this would violate the trade. So now you're starting to see why I favor previous day high, but not so much the buy side. Sorry, why I favor this buy side and not so much previous day high. Do I think we can trade into it? Yes, but if you're thinking about trading ever in the near future, if you are trading, you want to think about how you're managing your money and where you're scaling off. So I would scale a couple off here and then next here, and I would put myself in a position that after we've traded to just this target and this target, I'm risk free. So just quick little dialogue or whatever, inner musings. There's that 2 a.m. opening price, 47.78 and a quarter. So good point to just stop and ask yourself, from your back testing, if you've been back testing these levels over and over, what is the likeliness of it just to stop right here and trade down, and what PD array is in confluence? So there is a rejection block here, but is this rejection block really gonna send prices lower? Because why did we come down? Why did we come down here? Why did we come down to the Thursday and Friday new day opening gap? Well, it came down to take sell side. So what's the likeliness it comes down, right? Takes sell side, consolidates, and goes up just to this rejection block, only to come back down again. This doesn't look like something that they want to send it back down lower. They've brought it down here for a reason, and that reason was to take it back up to a premium objective. And if you look at these green boxes from 8:30 to, it should be 10:55, from 8:30 to 10:55, we have all these candles. If you look at the high of the range and the low, well, we have this low, and I've explained why this low is here, and we have this high. So, oops. So this is the high of the 8:30 to 10:55 or 11 range. So I'm thinking in a fractal sense. So log this 1050 fair value gap BISI, log the high, the consequent encroachment, and the low, which would be here, not here, but here, and log it in confluence with this order block that you see, these two down close candles. And if you really want to, log it with this SIBI, with the potential of this becoming a balanced price range, or it functioning as a balanced price range to take prices higher, meaning this delivered sell side. What did we do here? We delivered sell side, right? We delivered to sell side, take sell side, start working up higher, and it's really working it. It's working that level. It worked the new day opening gap a couple times before expanding higher. And now what are we doing here? Up, 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 down, 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 up, up, up. So we're delivering buy side, right? So this is becoming balanced slowly, and we're measuring it. It's not something where you just, okay, it's balanced, or it's going to be a balanced price range. But I'm watching these things minute by minute, each tick, and seeing if it's giving the feedback I want to. So if I'm looking for feedback, I have to have these PD arrays to use as measurements. Should this candle close below this, I would feel comfortable knowing that I wasn't operating today on a trade basis, but should it close below this, it would negate the idea for me, just because simply that seeing that sort of retracement, were I in a trade, could be stressful, and I'm not gonna put myself in a position where I'm stressing on my trade for almost no reason, if that makes sense. Meaning, I'm trying to think how to word this. If we were to close here, anything below this, I'll manually go here, right, where your sell button is, and I would close the trade myself, because I would not want to allow my brain to feel more pain from the markets when it just feels unnecessary, because it is a Friday. I had already said that we have that chance of creating smaller ranges, and another characteristic is these little, short retracements, or these, not short, exaggerated retracements back into the range. Look at this. This is how I'm visualizing this. 1 candle, 2 candle, 3 candle, 4 candle, 5 candles, 6, 7 candle, 8 candle, and more towards the 9th candle. I would even say the 10th or 11th is really when we started to leave the range. So that's 5 times 10. That's 50 minutes of your time spent going nowhere. But we are working higher in a sense, right? Because from here to here, we went higher. And you look at the continuation, 1, 2, 3, on and on and on, and then you look at this candle, and it's very exaggerated compared to all these previous candles that have been working higher. And so my thought is, if they're sending it back down into this range, they're going to send it down, and they're going to scare people out, and then they'll possibly send it up higher. Or I could be completely wrong about this buy side liquidity, but I'm sticking with what I have elected to stick with in the morning. So I'm basically sticking with my bias, and I'm not switching up because of a couple candlesticks. That is something, I'm not switching up because of a couple candlesticks. There's a different time for that, in my opinion. And by the way, we did close below that, so trade idea negated, yes, but we're still just watching these levels, just kind of journaling it. And it's kind of 50-50 right now, so would you really want to be operating in a 50-50 condition? Most likely not. I wouldn't feel comfortable going in as of right now. Note this level here, with the possibility of it being treated as inversion, or the possibility of it sending prices lower. So just watching. I'm labeling it as inversion. Watch that inversion, the 5-minute inversion here again. It's going back at it after coming into it once and trading a little lower. It's back at it again now, so just something I'm thinking that I'd like to add. I'm watching the candle close above this 5-minute inversion high, meaning if it closes above it, I want to see, and I'm not saying that this will happen because I'm not certain, but I would like to see, meaning I'm interested to see if we begin to pick up some speed and just ram this buy side. I wouldn't even look for this right off the bat immediately. I am just looking for this. So let's see. Notice how it still did not close above that high, so I'm still waiting for that. I'm gonna zoom in here just so you can see a little closer, focusing in on a fractal. Right there is good. Alright, so the 5-minute chart has been moved here, 15 has been moved here, and I'm on a 1 minute now watching some closing prices. So note that closing price, but we still have to be patient. Wait for that 5-minute closing price. The possibility of just this going down, touching that high, and running up into buy side. So NASDAQ looks like it's about to take its high from 10:50 a.m. at 16,876 and 2/4. Just about a tick or two, sorry, a handle or two away, a point or two, whatever. Dollar traded up into buy side, looking like risk on is what it wants. So that does aid the idea of the indices trading up into buy side above here, 1 minute short term buy side, and that 5-minute buy side pool. And then there's obviously buy side higher, but we're not looking at that right now in time. It's important to keep your expectations managed. And there's NASDAQ's buy side. So NASDAQ creating new high of days. Looking like it can possibly run that 16,885 buy side, which is the previous day high. Real close to it. It would almost be criminal if it didn't run it. So 1 more minute till this 5-minute candle closes. Still watching that. Lot of things to watch here, so it can be overwhelming, but it's important to stay cool, calm, and collected. In my opinion, that's probably the first and foremost factor that I've actually been trying to work on myself and improve to the highest degree. Almost like a state of flow. So many things that you have to keep in mind, so many things you have to watch. I mean, as of now I have 9 charts up, and I'm watching all of them while commentating. It can be tough, but hey, I don't know what I was gonna say. So there's that 5-minute close. So like I said, I'm measuring, I'm watching the willingness to spool higher and trade up into that buy side. And if you don't know what spooling is, before you stick around with me, go watch some ICT. NASDAQ previous day high booked at 11:31 a.m. New York local time, and it's a good time to note that the S&P is quite considerably below the previous day high. So we are treating any near short-term premium objectives almost as a previous day high, but we want to understand the difference between both previous day highs, because just because NASDAQ traded to its previous day high does not mean S&P has to, and also does not mean S&P has to do it at the same time. Could it do it today? Sure. That means that NASDAQ would be trading above its previous day high, and in sympathy, the S&P would just catch up. And as the NASDAQ is way above its previous day high, or quite considerably above its previous day high, and as it's expanding higher, the S&P would be expanding up into its previous day high for the first time. So and another possibility, lots of possibilities, but because we did trade to the previous day high, the chances of it diverging here and just going down to run sell side is a possibility. And I know I mentioned a lot of possibilities, but that's really all the market is, and you're playing a game of probabilities. But because we have a little bit more advanced knowledge on the markets, we can use that to our advantage. So anything below these lows, even though they're equal lows, and it could run that and just continue higher, anything below those lows, I feel comfortable closing the stream out, especially because I was going to close at 11:30. I feel comfortable closing the stream out and continuing on with my Friday, knowing that I had been watching originally from, I think it was around here, where I'd been watching. Let me see. Yeah, so around here I was watching at 10:40, 10:45. And that's a nice 1 hour session. I don't like to keep it more than an hour and 30 minutes or 2 hours. That's just when you start to drain yourself. So I have like a bank in my head, and I only like 6 to 7 hours a week of tape reading. Back testing and everything, I'll spend hundreds of hours. Not in a week, but you know. You know. If you know, you know. So just for your reference, this was the opening range, and then this was the silver bullet. So take a look at it, digest it, think what you want to think, log it. I don't care. I do care. Just log it. Just watch that volume imbalance. I like to call this volume imbalance accelerate, because it just formed a volume imbalance and then accelerates, but I don't really I don't have too much data supporting this. It's something that I'm actually in the process of learning, so you guys are learning with me. And there is the negation of the idea. So, unable to run above this 1 minute CPI. Beautiful price run from down here, if I'm correct. No, from here, after sweeping sell side, and I will make this very clear. Right after we sweep sell side, I'd mentioned, and I don't remember what I said word for word, but I do know I said it was 50-50. And you can see that despite we going up, it was only to trade to this rejection block and go into a state of, well, pain. Whoever is trading this is probably shitting their pants right now. And so I'm curious to see what it does. I mean, ideally, it would be run down here, scare people out, run some sort of sell side, or trade to a discount array, and then later on run that buy side, allowing anyone who was long that got stopped out to feel regret. So I'll be watching that for the rest of the day, but I will not be here So I will talk to you maybe Monday. We'll see.